there, welcome to our market update. Here we are towards the end of July, and everyone's been asking, where is real estate headed? What are we likely to see? And is a crash coming? So I've got some good data to support some answers to those questions. I want to give you guys a little bit of an update on our East Bay and basically some data to share about, kind of the national statistics. And a crash is not likely to happen. And I'll give you guys some answers why, but I want to give you East Bay first. So here we are. We like to track what we call our active and pending ratio. It's supply and demand at its greatest, right? Right now in the East Bay, 1,229 active, 579 pending. Pretty stable still, right? 1 month ago, though, in contrast, the last few months. So 1 month ago, there was 1,138 active, 698 pending, right? We're starting to see a little bit of a kind of a normalizing, right? Well, the hottest market this year, and I have to tell you, when the Fed met in January and they announced the intent to drop rates 3 or 4 times this year, it made the first quarter pretty hot, right? I'm going to give you the data on the first quarter and you'll see what I mean. Buyers were very robust, eager, thinking that rates were going to come down. Everybody jumped into the market. Well, in May of this year, the Fed decided that they were changing their mind. So we have not seen a reduction that we had hoped to see, although I think that may be coming. So we'll talk about that in a minute. Back in February, there were 668 active listings in our East Bay and 565 pending. So what have we seen? A little bit of an increase in inventory, a little bit of a decrease in pending, what you might say a little bit more of a normalizing market, which seasonally you're going to see that anyway. But I think we're seeing a little bit more of that. Buyers having the question of, are we likely to see a crash? And like I said, I'm going to show you guys some data. Before we do that, I want to share with you one thing that's super interesting. Everyone always likes to know what's the highest sale in our market. So the high end, right? The high end is staying stable. Right now, in our market in our East Bay, there are 35 homes above 5 million that are active, and there are 7 that are pending, right? The upper market's still a little softer than the rest of us. But what's super interesting is the highest sale in our market right now, just over 8 million, a home in Lafayette, right on Happy Valley. And what I love about the statistics on this house, they were on the market for 127 days. A lot of home sellers believe, anything after 30, you don't really have an opportunity to sell at top dollar. Well, this is so curious. After 126 days, they received 4 offers and the property is now pending. So what that tells you as a home seller, hang in there. It just takes time. When a market normalizes a little bit, it does take us more time to find the right buyers. And they, after 126 days, wound up with 4 offers. So interesting, right? Well, here's what I want to share with you. I want to share with you guys a couple of slides. This first one that talks about, it says here, though many Americans believe the housing market is at risk of crashing, the economists who study the housing market every day, they study the conditions, overwhelmingly do not see or expect a crash either this year or next year. So the economists are really telling us they are seeing stable, and this is why. The next slide I want to show you, it says here, just because we have not enough supply, the economists are saying not enough supply and the demand is high. That absolutely, a shortage of supply simply cannot crash. It's like we don't have enough inventory to suit the need. Therefore, prices are likely to stay stable. And the last slide I want to share with you, this is actually a slide from starting back in 1999 until present. It'll show you the progression of inventory. And what the economists tell us is if we have a 6-month supply of inventory, typically what that means is if we didn't list one new home in the next 6 months, that everything would be sold, right? So a 6-month supply is what we had back in the 1999. And then, of course, you see that 2008, 2009, kind of that financial crisis, inventory skyrocketed, which caused tremendous issues in the market. Of course, supply and demand shifted. If you look right now at this year and last year, we have such a low supply of homes, it's not likely to change. There are so many consumers out there right now with a 2.6% interest rate. If they don't have to move, they're hanging tight, which is keeping the inventory low. So those that are moving along, but those that don't need to, yeah, they're staying. So what I would tell you is what we are likely to see is stable. I predict an interest rate drop in August or September. Keep an eye out for that. That will likely keep the market more healthy as we move into the end of the year. Election years sometimes cause things to be a little bit wonky. I'd watch for that. Although after the election, everything seems to get back to normal and everybody moves on. But right now, stable. If you guys have questions, I'm Lisa Doyle. I'm excited to help you. Let me know. Give me a call anytime. Take care.